You're making some news today. You're announcing a new service for cross-border traffic. You're calling it XPO Mexico. Tell me, what kind of demand are you seeing, and what sectors are you seeing that demand from?
Well, first, Frank, we're expanding our Mexico service significantly in terms of capacity, border crossing locations, and getting more technology capabilities for our customers. And the demand that we're seeing more and more companies nearshoring their manufacturing. So today, 2/3 of our customers are industrial companies, and many of these companies are setting up manufacturing plants here in North America to be closer to their customers, and that includes Mexico as well. So we're expanding that service so we can support our customers with that movement.
All right, so yesterday we saw another truck company, different space, but J.B. Hunt, they reported another volume slowdown. You're in a very different space. There are a lot of largely focused on consumer goods, container shipping. You say you're mostly focused on industrial customers, but you also have some exposure to the consumer space. One of your customers is Ulta. Give us a sense. We've had retail earnings recently. What are you seeing when it comes to consumer-facing names and other retail names when it comes to demand and also inventory?
Well, if we think about it, today 2/3 of our customers are industrial companies, but 1/3 of our customers are consumer-packed companies, either retail, consumer packaged goods type companies. And we're seeing that segment, actually, we're seeing more strength in it. If you look at the second quarter, we've seen retail sales be up in the month of June, higher than expectations, and that's translating into more shipping in the retail sector. On the industrial side, things have been muted for a while now. Usually we look at the ISM manufacturing index as a good measure of how the industrial economy is doing, and it's been more in a contraction type space, but usually if the ISM is at 50, that's the even mark, and it's been hovering in that 48, 49 range for a while now. So we're seeing the industrials be muted, not getting worse, but not getting better, and we're seeing a bit more strength in the retail sector.
All right, so one of the things we've been following is Jay Powell's guidance and what he's been saying about possible rate cuts as we look at a increasing likelihood of a rate cut coming up in September. What does that mean for your business? What does that mean for the business of your customers?
Well, when you think about rates as a whole, starting on the consumer side, lower rates leads to consumer having more disposable income and also stimulates demand from a consumer perspective. And that leads to more spending, which leads to higher retail shipping in our industry. On the industrial side, lower rates means more capital being deployed towards purchases, which also stimulates the industrial economy as well. So no matter how you look at it, we've been in a freight recession for two years, Frank, and usually these things last for 1 year. So as you start seeing rates coming down, we believe that you're going to start seeing higher demand from a shipping standpoint that would stimulate the next upcycle for transportation.
Right. You know, you're mentioning there has been a freight recession going on for quite a while right now. It comes after that big boom during the pandemic. Recently, we've seen a rotation into the Dow transports. You mentioned at the top of the show. I have to ask you, I'm not asking you to be political, but some of that seems to be the quote-unquote Trump trade, people rotating with due to the confidence that they believe that President Trump's going to win. How do you see the election impacting your business? The idea that there could possibly be tariffs, expanding on goods, the emphasis on domestic production, things like that. I mean, how do you see that impacting your business? I'm not asking you about which candidate you think is going to win, but just the possibility of who's going to win impacting you.
Yeah, so regardless of the outcome of the election, the way we think about it, if our customers are nearshoring more of their manufacturing here to North America, whether it was more tariffs on the trade or whether it's them wanting to get their product closer to their customers so they are avoiding supply chain disruptions and getting the product there faster, we want to be there for them. So usually whenever production makes it over here to North America, that helps the less than truckload industry stimulate more demand. Now, in terms of the impact on the business, I believe the bigger impact on freight transportation is going to be what happened with the rates from a Fed perspective. The CPI having been lower than expected in the month of June is leading to potentially rates coming down, call it in the late summer, early fall, and that's going to have the bigger impact on our business in terms of seeing that demand stimulate again. But now keep in mind, Frank, for us and our business, the last data point that we published publicly was the month of May, and our shipment count was up 4% on a year-on-year basis. So despite the freight recession, it goes back to the great service we're offering our customers, and they are rewarding us with higher market share as well.